The Starlight Global Real Estate Fund gives investors the opportunity to invest in investment-grade commercial real estate located in world-class cities. Investors in this fund should be rewarded with tax-advantaged income and capital appreciation over the long term. We intend to invest in REITs and real estate corporations domiciled in developed countries around the world. Over 35 countries have adopted the REIT structure, including every G7 nation. While the structure varies from country to country, one popular element is the generation of tax-efficient distributions to investors. In some countries, including Canada, distributions are paid out of pre-tax income and avoid the double taxation that corporate dividends suffer from. In addition, the after-tax yield from REITs is usually superior to that received from common and preferred equities and high-yield bonds. Real estate revenues and expenses are contractual and long-term in nature, allowing real estate firms to generate consistent and predictable cash flows that translate into stable distributions. However, real estate companies are not without growth potential. Rents indexed to inflation or tenant sales, occupancy gains, acquisitions and developments all provide opportunities for real estate firms to grow cash flows and value for investors. Investors sometimes claim that they are fully invested in real estate via their primary residence or vacation properties. Other investors may have their own commercial real estate portfolio they manage. We would contend that the factors that affect the returns of a primary residence in Halifax have little in common with the factors that impact a regional mall in Singapore or an office tower in London. Similarly, a domestic commercial real estate portfolio will differ significantly from a globally diversified portfolio of investment-grade real estate. In 2016, the Global Industry Classification Standard was expanded for the first time ever, as real estate was carved out of financials and established as a standalone sector. The move recognized the unique risk-reward attributes of real estate as an asset class and should lead to larger and longer allocations to real estate equities by generalist portfolio managers. This move should also encourage retail investors to increase their allocations to real estate, just as pension and endowment funds have. The 19 largest pension funds in Canada control over $1.5 trillion in assets, and collectively have allocated over 11% of that capital into real estate. This allocation trend should continue as real estate continues to be one of the best performing asset classes for these pension funds. The Starlight Global Real Estate Fund will invest in global REITs and real estate corporations, but as global growth rates diverge, our investment allocations will shift. We have the ability to invest in real estate-related sectors that are more sensitive to global growth in geographies where growth is accelerating. Businesses such as home builders, real estate brokerage, and construction firms are all examples of potential investments. In contrast, in geographies where growth is forecasted to be more moderate, traditional REITs and real estate corporations should populate the portfolio. We intend to actively hedge our currency exposure and will look to take advantage of mispricings throughout the capital stack by investing selectively in fixed income and preferred equities. We are passionate about investing and excited to deliver on the promise that is Starlight Capital. We invite you to partner with us for the long term as we build this business.